Live from Singapore, this is Insight with me, Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. President Trump says he's preparing tariffs of around 25% on cars, chips and pharma imports, with an announcement coming as soon as early April. I spoke exclusively with famed short seller Carson Block about what he thinks Trump's really trying to achieve with his trade threats against even the closest U.S. allies.
Yeah, I kind of wonder if the game there, and also with the EU and the tariff threats, I do think that he's trying to push the political left out of power.
We get you the C-suite view of Australia's earnings season with the CEOs of property group Stockland and oil and gas producer Santos, both companies disappointing investors with today's numbers. Elsewhere, a crypto scandal engulfs the Argentine President Javier Milei. He's struggling to clear his name after a meme coin he endorsed turned out to be a massive rug pull. So are meme coins damaging the credibility of the crypto industry? We'll ask the president of the world's second largest crypto exchange by trading volume, OKX. Our top story, President Trump firing the latest salvo in his widening trade war, saying he'll likely raise 25% tariffs on imports of autos, semiconductors and drugs. Speaking with reporters from Mar-a-Lago, Trump said an announcement could come as soon as April the 2nd. While auto tariffs will likely land at about 25%, Trump says levies on drugs and chips could go substantially higher over the course of the year. Now, Trump's first 30 days in office have seen significant shifts in U.S. policy, including threats of tariffs on allies such as Canada, Mexico, and the EU. Mighty Waters founder and CEO Carson Block says following through on these geopolitical threats may not be practical. In an exclusive interview, Block told us what he thinks Trump is really trying to achieve.
The other issue that Trump has, if he's going to really go crazy with tariffs, is inflation. That's a big part of how he won the election. Now, he does have smart people around him. Scott Bessent, Treasury Secretary. I think Scott understands that you can't just go and, jack up or, impose tariffs on all imports and without causing inflation and a diminution in the standard of living of Americans. So, but, what's he going to do and when? And just because he hasn't gone crazy with China doesn't mean that he won't down the line. I mean, it's kind of funny because he's using, I wonder if he might at some point discredit himself with at least his tariff threats. I mean, Colombia didn't let a plane land, right? So he gets on Twitter like, we're going to hit Colombia with these tariffs. Okay, we'll let the plane land. But I mean, how many times can he get to do that? He humiliated Trudeau with the tariff threat. Yeah, I kind of wonder if the game there, and also with the EU and the tariff threats, I do think that he's trying to push the political left out of power. And I suspect that's because he views that if we get more right-wing governments in the West, we're going to form a better, stronger coalition against China. So I don't know how serious he is about the imposition of tariffs in those situations. Look, he says a lot of things to kind of move the goalposts, like his comments about Gaza, right? I don't think anybody considers it to be practical to relocate, 2 million Palestinians and to turn it into a resort. But I think what he's doing is he's basically saying to the Palestinians and to Hamas that, hey, you might look around here and see that all you have is rubble and think that you have everything to gain and nothing to lose by continuing to, focus on the destruction of Israel. Well, you know what? I'm going to move the goalpost on you because maybe what you should be focused on is actually not being shipped out of this land. Like you think Israel's going away, maybe you'll go away. Now that's not practical, as I said, but it's a way to change the conversation and to change thinking. So I think that tariffs, or all the tariff threats, are really part of that overall strategy that he employs.
My exclusive conversation with Muddy Waters founder Carson Block. We'll have more later on that interview. Now let's discuss the market implications of Trump's tariff threats with Pheona Tsang, CIO of Fixed Income at BEA Union Investment. Pheona, good to have you with us. We know that Trump is planning to expand those tariffs to include autos, chips, pharmaceutical. And just wondering how you're viewing the possible impact when you take a look at the stock market. For instance, the S&P still hovering at record highs, but some impact on the bond market.
Sure. Thank you. I think we have to understand that the objective of the tariff is multi-front. As we see, like in Canada or Mexico, is one kind of policy to achieve some domestic and foreign policy, like to stop the illegal immigrants and also stopping the drugs into the U.S. And for Asian countries, especially some of the chips companies or auto companies, I think the main objective for U.S. is to have more investment into the U.S., like the company to set up some factories in the U.S., so to create more jobs and for the U.S. And within the Asian bond context, like the corporate bond, actually we have very small exposure into the company that have significant export to the U.S. For example, for that revenue over 10% from the U.S. is account for only 2% for the Asian corporate bond index. So we see the quite limited impact in our space.
In terms of the yields in the U.S., though, how do you see this playing out? Right now, 10-year yields hovering at the bottom end of 4.5% to 4.8%. How might this play out? Why is it trading right now at a tight range? What catalysts can move it higher?
Yeah, sure. I think the market has been discounting quite a lot of term premium with fear, as there will be inflation pressure that from the U.S. tariff policy, and also the U.S. Treasury supply may be higher because of the more aggressive fiscal policy, and we have seen that. However, you can also see that the U.S. Treasury bond curve have actually flattened for the last month and so. I think it's because in the short term, we see that the Fed have to be on hold because of this potential inflation pressure. But there is a long-term risk into the growth in the longer term. And that's why we see the U.S. Treasury curve flatten. And especially now we actually have a Treasury and White House that are very sensitive to the level of yields. For example, in the latest quarterly refunding announcement, the new Treasury actually maintained the issuance moderately higher reliance on the U.S. Treasury bills as compared to the longer dated maturity. And actually, U.S. Treasury Secretary Scott Bessent also mentioned the administration focused to bring down the long-term yield so that to bring down the borrowing costs for the economy. And also you can see the Trump oil policy is to drive down the energy costs. And that shows us that they are really care about inflations. And in terms
it's
of
really complicated
yield,
for central banks in this part of the world, in particular, Pheona. We had the RBA, RBNZ cutting rates. Do you expect the yield gap between Asia and the U.S. to be expanded from here?
Yeah, so we see that the U.S. is holding on cutting rates, but Asia, like New Zealand or Australia, they continue to cut rates. So today we have Bank of New Zealand cut rate by 50 basis points as expected by the markets. And I think New Zealand have a much deeper recession than the central bank had expected in the second half of last year. And while the inflation has come down, especially for the stickier service inflation, and that make the room for the central bank to cut rate. But having cut rate by 1.75% for New Zealand so far for the last year, it may be closer to the end of the easing cycle. So as the central bank also said that, so the cut that coming at the remaining of the year may be more gradual in the 25 basis point kind of range. And we expect that it can be like the terminal rate of 3% for New Zealand. And as actually it's interesting, if you look at the bond curve on New Zealand, it's very steep. For the 2-10 year, it have 90 basis points of slope as compared with only 20 basis points in the U.S. That actually market is expecting this sharper downturn will be followed by a solid upswing in later half in the 2025. And actually, central bank are also more positive, like the growth to accelerate towards the end of the year.
Pheona, thank you so much for that. Pheona Tsang of BEA Union Investment. Still to come, a closer look at Australia's earnings season with the CEOs of property group Stockland and oil and gas producer Santos. Keep it here with us. This is Bloomberg. Welcome back, and we have breaking news. Chinese builder Sino Ocean's restructuring plan has gotten approval from a Hong Kong court. Of course, this is a builder which has defaulted. It is nearing completion of its debt restructuring without that backing of a key bondholder group, and the ruling could serve as a precedent for other Chinese developers considering using this approach to address offshore debt obligations. Now, it has dealt a blow to creditors who presume they could bargain for better terms. Now, some signs of stabilization in the Chinese market already. China's new home prices have barely moved. Of course, this is seen as a sign of market stabilization. Again, Sino Ocean's restructuring plan has gotten approval from the Hong Kong court. Now, over in Australia, it's earnings season getting into full swing with about 13% of companies listed in the ASX 200 reporting their results. One company we're watching is Stockland, as shares slumped the most since May 2020. Its funds from operations per share came in below estimates, although guidance was maintained. For more, let's bring in the Asia Trade co-anchor Heidi Stratwards, who's standing by with our next guest in Sydney. Heidi.
Thank you, Haz. And of course, an apt time to talk all things property, given that we've just had the first easing move from the RBA yesterday, the first in about 4 years. Let's bring in exclusively speaking to us today, Tarun Gupta, who's an MD and CEO at Stockland. Tarun, great to have you with us. And sort of the excitement and anticipation and relief was palpable with that first cut from the RBA. Is it going to make a meaningful difference to demand for you?
Over the long term, yes, it would. It clearly impacts sentiment and helps with the back pocket with our home buyers. Over the last few weeks and leading up to late last year, we were starting to see demand pick up. It's been bouncing somewhere near the bottom cyclically over the last 12 to 18 months, but I think buyers were anticipating easing of monetary policy. We've had fairly good demand in Perth, in southeast Queensland, New South Wales been good. And this will give that extra impetus for affordability to improve and therefore demand for housing. So, but it takes a lag. It's about, at least 6 months before you start to see the effect go through the economy and into housing demand.
In previous cycles we've needed to see at least sort of 2 to 3 cuts before it starts passing through to sentiment. This is also not expected to be a particularly deep or dramatic easing cycle. I think markets at the moment still looking at maybe 100 basis points total. Is that enough, do you think, to change the sentiment?
Yeah, I think more cuts would be required to really see an upswing in cyclical demand. We are still, as I said, somewhere near the bottom cyclically. Volumes are down in most instances nationally about 50%. But it's about affordability, and clearly at the moment there is a lot of pent-up demand, and first home buyers are struggling to get into the housing market. To give you some stats, at the moment around 45-50% of our inquiries are first home buyers, but only about 32% are buying. So they can't afford to buy, but they have a willingness to buy. And our long-term average is actually 50% are first home buyers. So FY21 we had 50%, currently 32%. So that dynamic of, as interest rates moderate with wages rising, that equilibrium between, affordability is what the market is seeking. When you see affordability being positive, like in Perth and Southeast Queensland, demands come back very robustly. We've had price rises, but very strong demand. But the big markets are Sydney and Melbourne. That's 70% of the housing market, and they are still either undersupplied or weak sentiment.
What about on the cost side? Because cost inflation has been a real issue as well. What's your level of confidence when it comes to development returns going into the next period?
We feel good about the returns and the margin expectations going forward. Last 12 to 18 months we've seen in civil construction, this is for home building, where about 80% of costs are civil construction, and then home building itself, supply chains have moderated and costs have moderated. So we're seeing at the moment, again, Queensland, Perth, around inflation around 4 to 5% in construction costs, but nationally it's tracking around inflation, so that's positive. What we haven't seen improve materially to pre-COVID levels is productivity and programs. They are still very elongated, and that means it's taking us longer to build the homes, and that is something that, again, working with industry, with our builders, we would like to see that come in. But costs have definitely moderated in home building. In apartments, though, inner city apartments, it's still quite a tight market. The supply chains still haven't fully work themselves out, and there's labour shortages currently.
Can I ask about the industrial pipeline? We saw Goodman's capital raise on the data centre demand and AI demand. Is that something that's compelling to you?
Yeah, we have 500 million of logistics developments currently underway in our platform. They're 80% pre-lease, so there's good demand for new warehouses. We did flag today that we've got approval for a 100 megawatt data centre at Macquarie Park. We've already done one of 32 megawatts, so we are exploring further opportunities in our portfolio to service what is critical infrastructure for the country.
Very quickly, of course, it is an election year. What's the one sort of policy decision that you'd like to see from whoever is in charge afterwards?
We would really like to see further easing of supply restrictions, or supporting supply and fast-tracking of supply of housing. We've seen federal government and state governments do that across the country. We would like to see further local government push and enabling local government to unlock supply. And the other one, as I said, is productivity in the construction sector. Productivity, as I said, we are not back to pre-COVID levels. We're down about 10-15% depending on which city you look at, and any measures to improve productivity, getting more skilled labour into the housing sector is what's needed, because we have a great pipeline of production coming up, and we'd like to produce more homes.
Tarun, really great to chat with you as always. Tarun Gupta, who's the MD and CEO at Stockland, speaking with us in light of those earnings, and more Aussie earnings ahead, Has.
Well, that's right. Let's stay on those earnings. Another company we're watching is Santos, after they reported full-year net income that missed estimates. Joining us on the line from Adelaide is Santos Managing Director and CEO Kevin Gallagher. Kevin, good to have you with us. We have production down, sales down, capital expenditure, though, higher by about 9%. How are you weighing growth versus investor returns?
Well, look, I think the results today are in line with expectation, although, as you point out, some of the numbers have deviated from this time last year. But it's mainly as a result of commodity prices and a little bit of natural production decline as we await our growth projects coming online later this year and in 2026. So really, I would describe the results as a strong set of numbers from the base business, showing very good progress on the major development projects, and the dividend, although down in absolute terms, just as it was last year, represents 40% of the free cash flow from operations.
Kevin, very uncertain future out there. We've been talking about Trump tariffs, climate change, drill, baby, drill. When you take all of that into consideration, you can only expect supply chain disruptions. How are you hedging against all of that?
Well, look, I mean, obviously, from an FX perspective and oil price perspective, we hedge some oil and we do significant FX hedging, given that our revenue is in US dollars, but a lot of our costs are in Australian dollars. But in addition to that, we have a very strong contracted LNG portfolio, particularly over the next 5 years, where around 90% of our LNG volumes are contracted, however, with significant flexibility built in, which allows us to recontract some of those volumes to take advantage of opportunities that crop up as a consequence of that volatility. And in fact, recently, with the announcements of tariffs, it caused quite a bit of volatility in those markets, and we were able to take advantage of that and secure some short-term LNG sales at very, very high oil price slopes.
Kevin, talk to us about the LNG demand you're expecting in Asia. We know that people are looking for new energy sources from the likes of Japan, China.
Yeah, look, I mean, I think if you look at the longer-term forecasts in nearly all scenarios, demand for LNG is growing over the next decade or two in Southeast Asia and South Asia. So we see very strong long-term fundamentals. Obviously, there's always the risk of volatility in the short to medium term, and I think companies like ourselves have to just have good hedging and good contracting strategies in place to manage that volatility. However, the long-term fundamentals I see is very strong, and I think it's a great opportunity for Australia and particularly for Santos, given our proximity to markets with our 3 big LNG projects in Darwin, Gladstone and Queensland, and of course in PNG, all being very close to those markets.
Kevin, thank you for your time today. Kevin Gallagher, MD and CEO of Santos. And tomorrow on Bloomberg Television, join us for a rare live interview with a senior official from Australia's central bank. We'll ask RBA Deputy Governor Andrew Hauser why policymakers remain cautious about easing after cutting interest rates this week for the first time in 4 years. That's coming up at 10:15 a.m. Hong Kong time, 1:15 if you're in Sydney. Quick look at how markets are shaping up here in Asia. They've been swinging between gains and losses on the back of the expanded tariffs expected from Trump, now to include autos, chips, and healthcare as well. The MSCI Asia-Pac Index reversing those gains, currently down by 0.3%. The Hang Seng also in negative territory, but remember, the Hang Seng has been gaining in recent weeks, driven pretty much by Hang Seng Tech Index. Up ahead, in 2024, Southeast Asia's IPO market faced several headwinds due to high interest rates and geopolitical uncertainties. Bhavik Vashi from fund management platform Carta will be joining us with his insights on whether the landscape has changed this year. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Southeast Asia's IPO pipeline is expected to improve in 2025. This follows a lackluster year for listings in the region. Avril Hong is here for a closer look. Avril, I like the optimism.
Yeah, it is shaping up to be a healthier year when it comes to the number of IPOs potentially for 2025. I mean, analysts have cited the FDI momentum, rate cut expectations, and this follows on from a pretty uninspiring 2024. And by some counts, it was the lowest number in 4 years in terms of IPO activity. And if you look at the expectations of improvement for this year, even then, it would be quite hard to beat the record year that we saw in 2023. So keep that in mind. Flip the board because, Has, as you know, the hottest IPO market in the region last year was really Malaysia. And this year, we could see the country's biggest IPO in years. Sources telling Bloomberg that Sunway Healthcare, this is the Malaysian conglomerate's healthcare arm, could list as soon as the second half of this year with a $4.5 billion valuation. Meantime, in Singapore, the government has been trying to revive the stock market. As you know, delistings have often outnumbered the number of listings, and we've seen the market really suffering from a lack of liquidity, low valuations. The government has just accepted the proposals of a review group. We'll get a full update on Friday, and some of these proposals include tax incentives to get companies to list. But this, I think, has so far disappointed investors that have been calling for more public funds to be diverted into the stock market to lift valuations overall, Has.
That's right. Those incentives won't be enough. Avril, thank you. Let's get insights into opportunities in Southeast Asia's IPO market with Bhavik Vashi. He's MD for the Asia Pac and Middle East at Carta, an equity and fund management platform which supports about 7,000 funds and represents $130 billion in assets under management. Bhavik, good to have you with us. Let's start with Singapore. It's a good starting point. Yes, it wants to provide incentives, but that's not enough. There are lots of issues, including liquidity, and they have to dig deep to make a difference.
Thank you so much for having me here today. First, I'd like to acknowledge, I think tax incentives are a step in the right direction. Every little bit helps, and I think at the company level, yes, but even at the funds level, for funds that have a certain exposure to SGX equities, they'll get a certain tax break there. So I think it's encouraging. We need more details, naturally. But you're right. Ultimately, what defines a thriving stock market is liquidity, and that has been the challenge for Singapore. I think we need to continue to work on that particular area, looking at the possibility of some market makers and things of that nature to really start to open up the IPO floodgates here.
You talked about how we need more details when it comes to those recommendations, but even, I think, with clarity on those recommendations, I'm just questioning whether or not we can see the kind of IPOs expected in the likes of Malaysia. $4.5 billion, unlikely to be seen in Singapore.
Yes.
Fair assessment.
Yes, unfortunately unlikely, especially within what we can see in the pipeline over the next 12 months. It's the liquidity challenge remains. The tax incentives won't necessarily address that head on. If you look at trading volumes, they're still down 40% of pre-2020 levels. And you also look at the makeup of the participants in this market. It's almost 60% retail investors. And so there is a bit of a mismatch in terms of the liquidity that's available in the Singapore market versus the types of companies that you see going. You referenced Malaysia, but if you look at Asia Pacific this year, you've got huge opportunity in fintech, electric vehicles, e-commerce, but it's, primarily the listings are in India, Hong Kong, and you've even got one of Singapore's companies, Shein, going in London, for example. So yeah, that is a challenge.
Therein lies a problem.
Yeah.
We talk about Hong Kong. It's become a very attractive IPO market. Did really well last year after a pretty slow start. Is Hong Kong taking the opportunities from the likes of Singapore and the rest of Southeast Asia, for that matter?
I think Hong Kong has done a good job of remaining competitive. Obviously, I think it has its own set of challenges. I think geopolitical being the largest potential risk to the Hong Kong exchanges, and that's an opportunity, I think, for Singapore. Obviously, they need to think about making it cheaper, faster to be able to list here. They need to make it more inclusive in terms of the companies that could participate in the public markets. Again, I know that there are ideas being floated around, things like SPACs, things of the nature of maybe even having a tiered system at one day. I'm very supportive of such initiatives. We'd love to work with the government on those.
Where would we see the biggest IPOs in Asia Pac this year?
Yeah, so if you think
how big are they expected to be?
Yeah, if you think about Asia Pacific, it is actually gearing up to be a very good year for the Asia Pacific region. I think you've got large IPOs. I think one of the biggest, arguably the biggest you'll see is CATL, which is the largest EV battery manufacturer
in Hong Kong.
Exactly. You have Reliance Jio that's planning to list. That's going to be in India. That's going to be pretty large, looking at anywhere from 100, 120 billion market cap. And then you've got some other kind of marquee names. I mentioned Shein earlier, that's listing in London, but that is a Singaporean headquartered company. Somewhere in the range of maybe a 60 billion market cap has been rumored. And then companies like Flipkart in India. And then I think what's more exciting is you've got this next layer, at least in 25, of some of those kind of venture-backed traditional startups that are actually looking to list this year, which is very exciting for folks like ourselves. Companies like Off Business, for example, in India, Gcash in the Philippines, Traveloka is rumored in Indonesia. It's very exciting to see companies like that thinking about going public.
India, I keep
Yes.
hearing Hong Kong. Do you know, not too long ago, actually, Thailand was a very hot IPO market. What happened there, and when do you see a revival of that IPO market?
Yeah, I think you're right. Thailand was very exciting. I think these things are a bit cyclical as well. If you think about kind of the cycles of innovation and then when they come to fruition in public. So people don't often think about it, but if you think, you can actually trace back to venture capital funding and private company funding and start to work backwards on a 10-year time horizon almost to a liquidity event. And if you think about all the venture funding that you saw in Southeast Asia about 10 years ago, it was concentrated in these regions, Singapore, Indonesia, Hong Kong, India, and so you're seeing the best companies graduate through.
So we just wait our turn.
To some degree, yes. Follow the money, as they say.
Bhavik, thank you. Bhavik Vashi, MD of Carta, Asia Pac and the Middle East. Now, still ahead on Insight, we head to the Consensus Crypto Summit in Hong Kong. OKX President Hong Fang will be joining us with her take on the biggest factors influencing Bitcoin prices and the increasing popularity of crypto ETFs. Keep it here with us. This is Bloomberg. Well, we're counting down to the Open in India, just 6 minutes away, and early action suggesting a lower open for the Sensex, currently down by about 0.2%. The Indian rupee at 86.96, but regardless of the red across the board, Carson Block says he is pretty optimistic about India. Take a listen.
A lot of our clients are non-taxable in their home domiciles. So for them to get clipped 15 or 33% is a pretty big deal. So my understanding, and I don't know that much about India yet, but my understanding is that there's really no discussion of changing that regime. But I would say that if India is serious about getting foreign flows into its capital markets, they need to exempt foreign investors from capital gains tax.
So that capital gains tax an issue for him. Meanwhile, Block is holding on to his pessimism on Chinese equities, even as the AI-fueled rally saw the likes of Goldman Sachs turning more positive. He told us exclusively why he thinks investors should not be so quick to jump back in.
What I've been banging the drum about for 15 years is that the accounting of these companies, especially the ones that are public outside of China, the numbers cannot be trusted. And we are in a world where I think that matters less and less, a world that is dominated by passive flows, where active investing is receding or has been receding for quite some time. So maybe that matters less. But then you layer on top of that the geopolitical risk. It's funny, this morning we had a meeting with a potential investor, and the meeting was going really well. But at one point they told us that they were pretty invested in China. They were excited about it. And, you know, and they look at things like that based on geopolitical or assessments of governments, et cetera, and government policy. And at the very end, I made such a mistake from a sales perspective because you know, they asked, well, what do you think of China? And, you know, blah, 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 blah. I think Xi has been an absolute disaster for China. And literally the response was, well, okay, on that note, you know, thanks for coming. So I think that I mean, if you're willing to take the risk that you wake up one day and, China has gone to war to try to retake Taiwan or has barricaded the island, and that could lead to a kinetic war. I mean, if you're willing to take that risk, great. I mean, there's a price for everything. There's a price for that risk. I've been seeing Westerners like that for a couple decades, not really understanding what category of uninvestable China is in. They'll say the right things from time to time, lure the capital in, and I think that is part of the geopolitical strategy here, because China has always sought to co-opt opinion leaders and key people who are key economic and business leaders, always sought to co-opt them in the West, basically the Western elite. So the more that they can get everybody, levered to China, I think Xi is viewing this as a negotiating tactic should he ever make that move on Taiwan. So, I don't know. I think it's different.
But Xi has always talked about making that move on Taiwan, and he hasn't. And perhaps there is sense in that. And perhaps for investors, there's comfort to take from that. I mean, you talk about how it is uninvestable, but how do you view the rally we've seen so far? I mean, as a trader, as an investor, you're losing out on this rally.
Well, I don't know. I sleep a little better at night, I'd say.
You are hearing the right murmurings from Xi Jinping, I mean, on the back of the meeting he's had, for instance, with the tech leaders. Perhaps, he's realizing that he needs to do something differently.
Well, and it's not to say that this is unique to China, but, I lived there for a number of years, and I was actually lied to a decent bit. So and just because China hasn't actually made the move, I mean, that has more to do with military readiness. Taking an island from a military perspective is incredibly difficult.
And that was my exclusive interview with Muddy Waters founder Carson Block. Now turning to digital currencies, a growing cryptocurrency scandal is engulfing Argentine President Javier Milei after he pointed his millions of social media followers to a meme coin called Libra that surged before quickly crashing. That's led to lawsuits and even calls for his impeachment. Argentina markets reporter Kevin Simauji is live for us in Buenos Aires. Kevin, tell us more about what happened. And first of all, thank you for staying up so late for us.
Happy to. Thank you so much for having me on. So the latest in the scandal that we have from overnight, we recently just put out some, summary of local reporting that's come out of Buenos Aires overnight, and that is that there's been allegations swirling around social media that one of the founders behind this meme coin known as Libra has actually bribed people in Argentina, President Javier Milei's inner circle. Now, what we've heard from the meme coin backer, Hayden Davis, is that those claims have no basis. We've received decline to comment from the presidential spokesperson who was rerouted, or who we were rerouted to via, someone who is close to President Javier Milei's sister, Karina. And so we've basically seen that the Pink House, the Casa Rosada here in Buenos Aires, has been in damage control mode. And so we've seen, decline to comments from their office, and as well efforts from the president to kind of paper over his efforts and his involvement in this promotion of this now controversial Libra coin.
As you said, Kevin, his sister Karina may have been involved. How so? Take us through what you're hearing.
So basically what we're hearing from accounts and local media reports is that some of the backers behind this meme coin, some of the people who launched this effort a week ago, which is crazy to think about that so much has happened within such a short time span. So basically the allegations are that the backers of this meme coin, the people behind the ventures who pushed this token out onto crypto exchanges, basically were engaged in a pay for play. So they were bribing, or they made payments to people within Argentina, President Javier Milei's circle, in order to get this token in front of him and in order for him to promote this coin on his social media platforms. Now, what we've heard and what we've seen reported locally overnight is that the backers of this coin have, forcefully rejected such allegations that have been, going all over X, and we haven't heard back from the Argentine presidential's office.
Kevin, thank you so much for that. Argentina markets reporter Kevin Samauchi in Buenos Aires for us. Now, the annual Consensus Crypto event is underway in Hong Kong, bringing together players in blockchain, digital assets, and Web3. Joining us now is Hong Fang, president at global cryptocurrency exchange OKX. Hong, good to have you with us. Let's start with meme coins. Are meme coins destroying the credibility of cryptocurrencies?
That's a great question, and thank you for having me. Hello from Hong Kong. I really believe that for crypto industry, there are two major themes. One is about community. The second is about product innovation that serve customer and bring value to customers. So I think these two have to go hand in hand. From our perspective, our platform really focused on investing in infrastructure, making things available for our customers, helping them have tools to be able to do their research and trade and manage their crypto assets in a responsible way. I do believe that for an industry in the long term, we do need to continue to invest in use cases, in more value that we can bring to the customer in the long term.
Hong, one eye on Milei, the other eye on Trump, his pro-crypto agenda. Now that he is in power, how are you viewing the prospects of cryptocurrencies? How are you positioning for that?
Sorry, can you reiterate the question again? It's a bit noisy in the background here.
That's right. We're keeping an eye on Milei. We're also keeping an eye on Trump, who has a pro-crypto agenda. How do you see this playing out for cryptocurrencies, and how are you positioning for that?
I see. So I think the whole industry is keeping an eye on what's going to happen in U.S. Everything is playing out. From our perspective, I think there are two things to remember. One, everything that is happening in U.S., it will have an outsized impact on the industry in U.S. and outside U.S. just because of the position of U.S. Particularly, I think, when it comes to regulatory clarity, when it comes to institutional adoption, and when it comes to banking rails, because of the correspondence banks in U.S. that has a outsized impact on the overall capital flow globally. However, from our perspective, as a platform, we have been focused on building the infrastructure, as I mentioned, which include two sides of infrastructure build. One is on the CeFi side, really continue to invest in regulated infrastructure around the world. Not only U.S., we actually also continue to work to prepare for U.S. market. But also we've made a lot of progress in Australia, in Singapore, in Dubai, in Europe. We just announced our EEA passporting among all the 28 countries. So I think that will continue regardless of what's happening in the U.S. The second infrastructure we have been investing in is the Web3 infrastructure, our self-custody wallet. I think we have been able to continue to invest in that, and then we've seen a lot of community adoption. I do think that infrastructure play and the infrastructure maturity over time will continue to help the industry mature, regardless, again, what is going to happen in one country, U.S. included.
Hong, do you see less regulatory risk for global operators with Trump in power? And on the back of that, do you see perhaps some motivation to expand aggressively in the U.S.?
I do think that there's uncertainty in the market because of a lot of the policy that is still playing out in U.S. because of the Trump administration. I think the market is looking forward to more regulatory clarity there. It hasn't come yet. I think the market is in close anticipation for that. The market is looking for Bitcoin reserve, strategic reserve. Obviously, it hasn't come yet. So I think that in the short term will bring volatility in the market. It also will affect the capital flow, particularly on the institutional side. However, I think that in itself also continue to add to the macro and geopolitical uncertainty that is actually a tailwind to Bitcoin, to crypto in the long run. I think that continue to build the narrative and the thesis for this particular crypto, this particular asset class.
We've heard Trump say that he wants the U.S. to be the global crypto hub. What does it mean for the crypto hubs in this part of the world? Are they looking less attractive than before?
I actually think that crypto is a very global and local market. And we've seen that playing out in the last few years. U.S. is a very important strategic market, again, because of the U.S. dollar, because of the banking rails, because of the capital and regulatory flagship impact of that particular jurisdiction on the other jurisdictions. That's for sure. But at the same time, we also have seen Asia, in Middle East, Europe, taking on its unique role in building the regulatory framework, the various community, local community in Asia, again, in Europe, in Middle East, in Latin America. Each of these communities have its own unique demands, requirements, again, because of its local, cultural, economic, and various other factors. So I do think that as we see, more outsized impact from U.S. For this matter, I also believe that there are very unique, independent, and dynamic hubs that have been, taking shape in different parts of the market. And that's also why, from our perspective, we have been really investing locally in Singapore, in Australia, in Dubai, in Europe. That is very important to stay close to local community.
I'd be remiss not to ask you about the outlook for Bitcoin prices. We know it saw a surge, but now it's underperformed even gold. I'm just wondering what happened to that store of value. Where do you see Bitcoin going from here? You know that I'm long-term bullish on the store of value narrative for Bitcoin. I don't think that actually changes. I think there are short-term factors that is really playing into the price. Consensus shaping takes time. I personally actually hope that we actually would have a bit more time for the builders, for the community to continue to build use cases, for the grassroots community to be able to stay in the game before Bitcoin price goes up too much, before the sovereign nations take on the Bitcoin strategic reserve position and drive institutional adoption too fast, because that would potentially risk leaving the unbanked community, those who probably need this the most, out of the picture again. So I would actually appreciate a bit more time for us, for our platform, for different various protocols, projects, to continue to build and provide that access to the larger retail population. Hong, thank you so much for your time.
Yes.
Hong Fang, President of OKX, braving the noise at Consensus in Hong Kong. Well, tomorrow on Bloomberg Television, join us for a rare live interview with a senior official from Australia's central bank. We'll ask RBA Deputy Governor Andrew Hauser why policymakers remain cautious about easing after cutting interest rates this week for the first time in 4 years. And that's it for Insight. Keep it here with us. This is Bloomberg.